Good evening, everybody. Welcome to this wonderful webinar. Members, today we have a webinar on valuation and loss assessment under fire insurance. The insurance is an effective mechanism of protection of property unless the insurance policy responds in full measure in case of claims against inadequacy in scope of coverage and sum insured. Therefore, there is a need to properly understand the relation between indemnity provided and the sum insured under the insurance policy. The indemnity provided can be on market value, reinstatement value, or agreed value basis. The principle of average will apply if the sum insured does not correctly reflect the values of asset and the same is treated as underinsured. Hence, proper valuation of asset for the purpose of fixing sum insured is very important. The presentation is intended for IISLA members and practicing SLAs to discuss various methods of valuation in general, and specifically those related to material damages insurance policy through case studies. Members, we warmly welcome you as well as today's our speaker, Mr. R.K. Patel. He is from Vadodara. He is a Bachelor of Mechanical Engineering, Master of Engineering Thermal Science, MSc Real Estate Valuation, Qualified Cost Accountant, Certified Energy Auditor. He has a rich experience of 17 years industrial experiences at various levels. And members, it is very proud moment for IISLA that he is also member of our institute. He is also chartered engineer and certified energy auditor. He is in the Council of Valuer IOV. So he has also published various papers. You can see his biodata. He has published, presented more than 60 papers. Eminent speaker at various seminars and conferences on valuation, costing, finance, energy, insurance, etc. The Institute of Valuers awarded him gold medal for his article published in Indian Valuer of the year 2008. The IOV awarded him merit certificate for his article published in Indian Valuer for year 2009 also. He has been awarded bronze medal for his article published in Indian Valuer of the year 2014. So, members, we again warmly welcome Mr. Patel, sir.
Yes.
We welcome Patel, sir, and over to you.
Oh, thank you. Thank you, and good evening to all the participants. And today my subject has been the valuation for insurance. And the preamble has already been discussed. So let us start straight to the subject, and I'm sharing the screen. So the planning is that first 20 minutes, we will have general discussion about the methods and all these things, 20 to 25 minutes. And then next half hour to 40 minutes will be on case studies. And because that will strengthen the understanding of the insurance and importance of sum insured and what role it plays when litigation is there. So let me start with some initial remarks why this subject is relevant at this stage. And it's an appropriate time. The topic has been chosen by your IISLA Council because see, this is the changing scenario of valuation profession, and that indirectly affects to the IISLA members as well. Recently, Valuers Bill 2020 has been proposed by Ministry of Corporate Affairs. They formed an expert group committee, and this expert group committee, after reviewing the valuation policies all over the world, they have brought out and drafted Valuers Bill 2020, and the MCA has invited comments from public or whoever is the stakeholder to be commented by or suggestions by the public at large by 28th of May 2020. After that, considering all the suggestions and recommendations or any kind of comments made by the public or stakeholders, the same will be put up before the parliament. And then when parliament passes this bill, then after president's signature, it will become the Valuers Act, and it will be known as Valuers Act 2020. So, and once Valuers Act 2020 will be enacted, no one can designate himself or practice as a valuer unless he is registered as valuer under the Valuers Act 2020. And there are various qualification criteria and examination criteria have already been defined in Valuers Bill. So let us see how it is passed. But most likely it is going to be the profession of chartered accountants, cost accountants, company secretaries, and lawyers. Because up till now, valuer has not been enacted properly, except under the Companies Act 2013, and earlier there was a Wealth Tax Act 1968. So under these acts, only the valuer has been defined. But just like chartered accountant is, once you say chartered accountant means he is meant as a chartered accountant. But today what happens, anybody who pretends himself to be a valuer, he works as a valuer. Just like we surveyors also, most of the surveyors, we are getting the license of surveyor and loss assessor, but most of the surveyors are designating themselves as surveyors, loss assessors, and valuers. So once this act gets enacted, nobody can practice or nobody can designate himself as a valuer or pretend to or present himself as a valuer, because that becomes a crime under the Valuers Act 2020. So we are this way going to be affected. So we have to find how we get the entry into the Valuers Act 2020. So I suggest all the valuers to read this Valuers Bill 2020 and find out that how they are going to be placed once this Valuers Act comes in, because a lot of surveyors are giving valuation reports to the parties for the purpose of fixing up the sum insured, or sometimes they give the opinion on valuation to the insurance companies or to the litigations. So that will be stopped unless he is registered as a valuer under the Valuers Act. As far as valuation related to loss assessment is concerned, surveyors will do the valuation for the given case. Yes, under IRDA Act, yes, we are surveying, and as far as the case is concerned, we are doing the valuation for the purpose of adequacy of sum insured, but not for the purpose of fixing the sum insured prior to procurement of the policy. However, SLA will not be able to give valuation for fixing sum insured as well as there is a case of dispute, arbitration, litigation as far as valuation matter is concerned. So in that case, these people, arbitrator or any of the ombudsman or any of the court, will refer the matter to the valuer under Valuers Act. That is my interpretation. But if you read the in between lines of the Valuers Bill, it means that. The Valuers Bill also proposes to amend various laws, including IRDA Act. So how it is going to be amended, I don't know. But under the Valuers Bill, they have made one schedule wherein they have given an example how the Companies Act 2013 will get amended as far as valuation matters are concerned. So similarly, they have listed out number of acts, including Banking Regulation Act, IRDA Act, Wealth Tax Act, and lot many acts. So all these acts will get simultaneously amended. So it will be written that whenever there is a valuation matter under those acts, they refer to the valuer registered under Valuers Act 2020. So this is the key point which we all surveyors will have to understand, that tomorrow whether we will be able to write valuer word in our card, or can we present ourselves as a valuer before anybody, or can we pretend to be a valuer, or can we give any opinion on valuation? I think that is going to be the very question mark. And if at all one does knowingly, unknowingly, ignorantly, then also he is liable for the penal action under Valuers Act 2020. So this is the changing scenario which is coming up. So still we have a time of 28th of May, and I suggest IISLA Council to read this, how the Valuers Bill 2020 will affect to the surveyors who are also doing valuations. And and the authority as valuation matter is concerned, after they have got the survey report, where whenever there is a dispute or kind of arbitration or litigation, in that case, whether they will be able to take the services of this SLA as far as valuation matter is concerned, so that is to be seen. So why insurance? We all know why insurance. Insurance is taken for one of the following purposes: to work out the replacement for the purpose of replacement of asset or income or both, though the occurrence of specified contingencies or perils. Yes, this we all know because we all are surveyors. Relief from legal liabilities, and because liability insurances are also there, and loss of profit. So these are the three reasons. Any for region, people will go for insurance. There are two importances of valuation for insurance purpose. One is the importance for fixing of the sum insured. So amount declared by the insured, you all know that amount is declared by the insured, and in most of the surveys which I have carried out and most of the fire surveys surveyors, they know that amount declared by the insured, and when the claim arises and adequacy is checked, in that case most of the people fall under insured. In that case, the case discussion start, dispute start, litigation start. Okay, an amount for which premium is charged. So when sum insured is declared, premium is charged. And then it also gives the feel to the insurers that what will be the maximum liability in if at all there is a total loss. So fixing up the sum insured is very, very important from these two angles, from insurer's angle, to fix the premium and to know the maximum liability so they can provide for. Or if they have to go for reinsurance, they also think of that. The basis of calculation of underinsurance in the event of claim. I think this is where most of the surveyors are comfortable, because we know. But whenever there is a complex plant, big plant, I think checking up the adequacy of sum insured is also very, it's an art, and it calls for a lot of knowledge of the market, economy, and the trends of valuations. So this is where I think we all are doing as far as our case matter is concerned. Valuation is very simple for let us say motor survey. Okay, because in motor we know that what value we are going to derive, because it is always on market value basis. For small furniture fixtures, yes, we can easily fix it. For individual machines, yes, we may be expert on that. But when there is a complex plant like petrochemical plants or power plants or chemical plants, I think there it calls for great job. I think I'll discuss that where it calls for different kind of approach. Implications of no adequacy of sum insured. What happens if it is not adequately? If it's too low the sum insured, I think it is heavily underinsured. So who is going to be penalized? Insured. And for very small amount of premium, he may be losing in lakhs and crores of rupees. Over insurance would not mean anything, okay, because it will not pay to insured. On the contrary, it will add cost to the insured. So adequate sum insured. So fixing of the sum insured is very, very important from these two angles. Valuation efforts. Valuation is a very big area, and every here and there one needs the valuation. So it is for taxes, balance sheet purpose, that is financial reporting, merger acquisitions, and so as for insurance. Because up till now, valuation for insurance has been ignored, and it's a very gray area. Most of the big insurers also, I have seen that insurance portfolio has been treated as a secondary portfolio. Only thing they wake up only when there is a claim arises, and then surveyor says that you are heavily underinsured. I think they get wake up, and then they start influencing the insurance managers also, and saying that surveyor is wrong doing all these valuations, and they try to bring the surveyor in pressure. I think that should be stopped. Though, and it will be automatically stopped once Valuers Bill comes, Valuers Act comes. Though, because valuer will be a separate entity than surveyor. So I think this is the area where insurance company will also have to think of. Though there exist various methods of valuation, appropriate valuation method depends upon the purpose of valuation. So there are different purposes. Similarly, our insurance is also different purpose of valuation. Okay, so not necessarily that all valuers may understand the insurance. Okay, but if he is a genuine valuer, I think he will take not much time to understand the insurance matters, because in the whole sea of valuation area, insurance is just a drop. Though there exist various methods, yes, various methods employed by the valuation for valuation is reviewed here, and then examine the current practices being followed in respect of valuation of asset for the portfolio. This is the purpose now. Valuation methods employed for valuation for the insurance purpose are examined here. Methods of valuation of assets. If you go for any assets, these are the methods you will find in most of the valuations. Valuation based on replacement cost basis, I think this is what we are comfortable, RIB clause. Okay, so it is nothing but for the cost of reproduction, reconstruction, or replacement of a particular asset or a property. When there is a reproduction, means some manufactured item or constructed item is there, just like plant and machinery. In that case, we can say it's a reproduction cost. Replacement means readily available equipments we are replacing, bringing, and then just replacing. It's a replacement cost. And reconstruction means any kind of a construction or building or bridges. In that case, what would be the cost today to construct similar kind and capacity asset or property today? I think reproduction costs, replacement cost, or reconstruction cost new is similar, is nothing but reinstatement value, what we mean our insurance policy. Good as new, yes. There are situations where the machine or plant working satisfactorily because of good maintenance. That happens. Okay, good maintenance is there, so machine looks like new. But in this such situation, the valuation method is used, which represents original actual cost less depreciation, but adding back the maintenance cost. Yes, this is the method followed, good as new, because maintenance cost is adding value to the equipment. It is the depreciation is a normal age. Okay, but because of good maintenance, somebody's age is less than what is the actual age. In that case, to that extent, his value is more. So this is how good as new. There is nothing but a market value concept. Similarly, when you say that okay, upgradation is there, no, you are deducting for that. So similarly here, if it is a good condition, you add the cost to that. In that case, that cost added becomes the value of that property. Sum of part valuation means individual parts are added together and made the valuation. Okay, just like suppose you are not getting I think plant, or let us say one DG set is tailor made. It is not the case generally, but suppose it is a tailor made and somebody has given specific specifications, so not readily available in the market, then somebody will make the DG set for him. In that case, generator will have different specifications, engine will have different specifications, radiator will have different specifications, its tank will have different specifications, its control will have different specifications, which are not readily available in the market. In that case, valuation is required in parts wise, and then this part valuation is added together. Fair value method is just like a financial reporting purpose. It's a fair value means what will be the exchange value of any asset or property. It's nothing but the market value. Okay. Depreciation methods, book value. These are also methods of valuation. Book value is nothing but the what is reported in the balance sheet and profit and loss account is nothing but the book value as per the depreciation rates fixed by Companies Act. Okay, so in that case, book value and some of the insureds, we understand, we also find that they have insured for book value, and chartered accountant comes into the picture and says that no, he has done the property, he has taken proper valuation, and he has insured for book value. Or sometimes he said that he has insured for gross block. That's why he is adequately insured. Because when we compare this gross block or book value with RIV, I think he is heavily underinsured. Market value I have explained. So what we have to understand, three fundamental things when we do any valuation, so as insurance valuation: price, cost, and value. I think people are misunderstanding these three terms, and sometimes interchangeably they use. In place of reinstatement value, they take price. In place of again market value, they take cost, and then depreciation. I think this misconception should go away. So these three terms are to be thoroughly understood. price is actual observable exchange price in the market. I think MRP is not the cost and not at all the value. Value, which is the value judged by the person who is owning it or the person who buys it. I think this is what we have to understand. So MRP is not necessarily a cost and the value. Okay. And we have to see that whose hand the asset is there. So accordingly, you have to find out the value. We'll see later. Cost is production, construction, rebuild, reproduction, reconstruction, replacement, reinstatement, related concept. Distinct from exchange. It is different than exchange. Okay. It is not for exchange sometimes. Okay. Suppose I am building my house. My house, I may fix it that I want to sell it. It is not the price, but I am fixing the value at which I am going to sell. Okay. So cost of construction may be different, but value will be different. Okay. Sometimes value will be more than cost of construction, and sometimes value may be less than cost of construction. But the value becomes price once it is sold. Then in the seller's hand, it's the price, and in the buyer's hand, it will become the cost. Till then, it is the value is value, and once the transaction has taken place, it becomes price, and once the price is fixed, then it becomes cost for the buyer. Okay. And the revenue for the purchaser, for the seller. So basis, there are two bases of material damage insurances: indemnity basis and reinstatement value basis. And third is the agreed value basis, because a lot of marine policies are given on agreed value basis. Otherwise, for material damage insurances like fire, then MB policy, or for engineering insurance policies, IR policy. These two concepts are there, that is indemnity and reinstatement. Agreed value policy is more sometimes in marine insurance, but nowadays they also think of valuation basis. So indemnity basis, reinstatement, agreed value I have discussed. Now most of the assets, if you are going to value, they will fall in one of these kind of things, that is with building, furniture, fixtures and fittings, plant and machinery, and stocks. So when we discuss all these things, that okay, we should mean by building, sometimes some buildings are part of plant and machinery. So we should be able to distinguish. It cannot be treated square feet rate for the residential building, for the square feet rate of building of a residential nature can be applied to the building of plant and machinery. I think this is what we have to understand. And sometimes some specially constructed buildings are treated as a part of plant and machinery, that people forget. So if they don't understand all these concepts, how they can do the valuation? So this is what one has to understand. Furniture, fixtures and fittings. I think this is also different. One has to be able to differentiate what the fittings mean. And then stocks. Stocks are also of different kinds: raw material, semi-finished goods, finished goods, and then some of the goods are packed goods, some are the loose goods. All these things we have to understand. And then if the method of valuation changes at which stage the stock is. This division is useful because of each group has its own peculiarities and characteristics, hence need a separate treatment for valuation purpose. I think this is what one has to mean it. Building. So mostly value of land is excluded. Plinth and foundation. I think this is where most of the material damage insurance surveyors are having their disputes with the party. Plinth and foundation do not get damaged in fire and hence may be excluded. Yes, but if you are going to cover the earthquake, I think earthquake will damage plinth and foundation. And sometimes in flood also we find that plinth and foundations are damaged. So if it is excluded, I think insured is going to get a lot of heat. Better to define that plinth and foundation, then leave it to the insured whether he wants to insure or not. And compound wall definitely is to be included in the definition of building. Some insured of building above ground level, buildings should be same for both earthquake and accident. Yes, for ground floor, living ground floor, first floor, second floor, we find this kind of insurances in multi-story buildings. Okay, somebody will insure his own property. He will not insure for ground floor property or all these things. So in that case, plinth and foundation becomes the part of it. Okay, and then proportionate share he has to insure. The value of embedded items. either underground or walls, roofs should all form part of the valuation. Some embedded underground parts, okay, underground foundations of special plant and machinery, they also become part of plant and machinery, because this foundation cannot be used for any other purpose except that machine. So better to insure for that also as a part of plant and machinery. The buildings are generally insured on, so this is where the disputes sometimes arise between the insured and the surveyor, and ultimately matter goes to the insurance managers, and sometimes insurance manager also don't understand that, okay, the specially constructed foundation, if it is damaged and along with the plant and machinery, then they will take up the value of only plant and machinery, not the foundation. In that case, I think, and the surveyor say that, okay, foundation cost is to be included in to work out the reinstatement value, and insured falls under insured, and then case dispute arises. The buildings are generally insured either at original cost basis, book value basis, market value, reinstatement values. I think we, as a surveyor and as a valuer, we should advise them to go for reinstatement value, as we discussed earlier. So this is what I have discussed. And plant and machinery. Great art arises when you are doing the valuation of plant and machinery. Working out sum insured of plant and machinery, especially old one, poses serious problems, because we come across old machines only when we go for valuation. For brand new plant and machinery, it's very good. For first year, insurance is the same as the cost, capital cost. It's very simple. But when there is a old, then question arises. And when it is a complex plant and machinery, then in large industrial risk, which takes years to complete, the capitalized cost in the first year itself may not be sufficient to cover the replacement cost in the case of claim, because to construct this plant, it would have taken 3 to 5 years. So and what they capitalize is the cost only. So 5 years before, they must have purchased the material, and they are capitalizing today. 3 years before, they might have incurred the labor, and they are capitalizing today. But if you have to replace this whole plant and machinery or industrial risk today, do you think that it will be the same as the cost? No. Then in that case, it's a great task arises before the surveyor, while assessing the loss and checking the adequacy of sum insured, or a valuer who is doing the valuation for fixing the sum insured. I think sometimes most of the chartered accountants also don't understand. They say that my plant is new and I have capitalized, this must cost 100 rupees. I think that should be the sum insured, but really its value may be 120. So this is what one has to. Insurance companies generally insure plant and machinery on either market value basis or reinstatement value basis. Okay. So if I have been asked to do the valuation of any plant and machinery or buildings, then I advise the insured to go for reinstatement value. Then sometimes he may ask for market value basis. Yes, we'll give the market value basis, but our advice as an ethical practice should be on reinstatement value basis. Okay. Market value basis, the method suitable for machines of common type used for general purpose, freely available in the market. Yes, I can easily replace generator if it of the standard specification. Transformer up to small size, okay, I can easily replace. Some of the buildings, I can easily give it the market value. Yes, yeah. But on the current replacement cost, it's today's new cost, some depreciation is applied. Depreciation is because of age, use, wear and tear, etc., to arrive at the market value. Okay. The market value thus refers to the cost of current price level of the asset of the similar type and nature. Obviously, this method is not suitable for plant and machinery of special nature that are not regularly bought or sold in the market, because there are you may come across a lot of such assets which cannot be easily available in the market, which are not available in the market, but we have to specially construct that, or they are sometimes tailor-made plants, tailor-made machines, as I gave example earlier. So in that case, and now, when we do the valuation of plant and machinery, we come across lot of situations where there is a great challenge to do the valuation, because see, some old machines are there, and then the same manufacturer is not there existing in the market, and he might have stopped the production. So what happens then? I think we have to find similar kind and capacity plant or machine, and then do the valuation. So this is the great challenge to the technological improvements taken place over the time. Okay, because the old machine compared to old machine, the new available machine, because we are going to take the reference new cost replacement is the reference for working out the value of old machine. Then new machine has a higher output and productivity, less manpower requirement, lesser fuel consumption and operating cost, and additional range of functions. I think to that extent, the plant and machinery under valuation is little bit obsolete. So even though the similar specifications are there, because of this criteria, the reinstatement value of those old machineries are less than the today's due replacement cost. So this is where surveyor has to do the due diligence and do the valuation for the purpose of adequacy of sum insured. Otherwise, what happens that when any dispute arises, or dispute is not necessarily by the insured, but insurers also may think that they are going to lose a lot of money, and this aspect is not been addressed by the surveyor, he may refer to the valuer, and valuer may give different kinds of reinstatement value of the old plant and machinery. Machinery technology might become obsolete. This is what I have discussed. And special treatment required in working out the reinstatement. Now, how will you work it out? When the current replacement price are available, fantastic. You can take them as a reference and make adjustments I discussed in earlier slide. But current price of similar plant is not available. What happens? Suppose there is an old power plant is there, the fertilizer plant is there, working since 20 years, and you have been asked to fix the sum insured, or you have been asked to check the adequacy of sum insured. Similar plants are not available. The similar machines are not available. They are tailor made at that time, and today also somebody has to construct similar plant, then also they have to meet the tailor made specifications. So in that case, the best method is the indexation method. The old cost is escalated to today's, considering various economic factors. I think we will discuss later on when we discuss the case study. Insurance on residual value. I think old machinery or sometimes silent race are valued on this market value or residual value. So, and then stock. Stock is of different kinds. Raw materials, stock in process, finished good. This is related to manufacturing activities, and trade in trade belonging to manufacturer, wholesaler, and manufactured goods. Manufacturer himself is trading and storing in the warehouse. Wholesaler is purchasing from the manufacturer and storing in the his warehouse, and retailer is purchasing from wholesaler. I think the same item have different values at the stage of raw material, at the stage of stock in process, at the stage of finished goods. When it is sold to wholesaler, the cost to the wholesaler becomes a value in the hands of wholesaler, and when it goes to retailer, what retailer has spent to acquire that, that becomes the value to be insured. I think this chain one has to understand very clearly, because sometimes manufactured product has a cost of 100 rupees, but when it goes to retailer, it becomes 150. So retailer should have insured for 150 rupees, and wholesaler might have insured for 120 rupees. Manufacturer in his warehouse might have insured for 100 rupees. So this is what one has to understand. So the same item has different values in different hands. So by doing the valuation, or by doing the checking the adequacy of insurer, sum insured, one has to check this. So raw materials are valued at net cost of acquisition, that is landed cost, with nothing but purchase price plus transportation, taxes, duties, loading, unloading, and all these things. Finished goods are valued at landed cost of raw material plus processing cost, direct and indirect charges incurred for processing the suitable increase in the inflation. Okay, so this is what one has to understand. So here FIFO-LIFO method also comes into picture. Stock in process is valued the landed cost of raw material plus processing cost up to the stage of completion. That is what one has to understand. So as I discussed, market value is different in different hands. Declaration policy. In sometimes declaration policy is a frequent fluctuation of stocks is there. Then one has to be advised on declaration policy, because the owner does not know that when the price will fluctuate and when the value will fluctuate over a period of policy. Then minimum sum insured per location also is a different, and minimum sum insured is to be described, because depending on seeing the trend, how the stocks are being stored and what is their projected business. So accordingly, sum insured can be advised, and it can be checked while assessing the loss. then monthly declaration is required in that case. That monthly declaration will be average of the highest value of the risk at each day, highest value of any day of the month. And then because this declaration policy, the insured is entitled to get the refund if he has insured initially at higher amount. So why he should be the loser, being our client? Or as an ethical practice also, we have to advise him that yes, he is entitled to get the refund provided he submits his stock returns periodically to the insurance company as per the policy. Floater policy. Floater policy means the quantity is changing from time to time and it may be stored in different places. So at different places, depending on the market, the value may change from time to time. So in that case, different locations are to be declared and different total sum insured is to be declared, and highest and minimum sum insured to be mentioned at each location. So this is what I think. These are very simple principles one has to understand to advise the client. Consequential loss policy. I think most of the surveyors are, I think, not the chartered accountants or so. So I'm not discussing this on detail. Maybe sometimes we can discuss. So let us start with the case studies. I think you are thorough with the methods I have mentioned, and let me start with the case studies so that it will give clear idea. Good. Yes, this is the first case study of very simple machine, that is air compressor. Air compressor. See, loss claim and assess we understand. For reinstatement of damages, the insurer has proved and installed air compressor XYZ, paid 19 lakhs 4,000 as detailed below. Basic price was 17,525, excise duty was 8.24%, and then CST, that is customer sales tax. Today it is replaced by I think GST. Okay, but understand that this is the GST only. And then he replaced at 19.04 lakhs rupees. Then these prices included price packing and forwarding. Now, since the sum insured has gone, the insured has gone upgradation while reinstatement of them.
But sorry for disturbing you. That
Yeah.
slide is not changing. Just check.
Slides are not changing.
Not changing. Yeah, it is stuck up at 23rd
Oh,
only.
yeah. Okay.
Yeah.
Is it clear?
No. Yeah. Now it changed. Yeah.
Is it clear now? So
yeah.
let me start afresh. Okay.
Yeah.
It's a simple case of air compressor. For reinstatement of damages, the insured has proved and installed air compressor X and paid 19 lakhs 4,000 rupees as detailed below. Basic price was this, excise duty and CST, then it comes to 19.04 lakhs rupees. And then today, I think it's an old case, that's why excise duty and CST, but now it is replaced by GST. Principles are same. Since the insured has gone upgradation while reinstatement of the damages, on our insistence, the insured collected a budgetary offer for the same model. Okay, what he said initially, that same model is not available, but however he has got the quotation from the supplier, and then it was said that 17.52 lakhs. So in place of 1725, 1752. So 1752 is inclusive of all the taxes, packing forward and all these things. So what he claimed was 19.04, but similar machine is now can be replaced at 1752. I think loss should be assessed at this range. But now, since he has got the budgetary offer, naturally he has the scope for 10% negotiation. So I think this loss should have been assessed at 15.33 lakhs rupees. But what happens now? Since the above offered budgetary offers, we have analyzed the old machine. Now it's a duty of the surveyor to do the due diligence, whether this 15 is also correct or not. 17 is also correct for or not, or 19.04 what I claim is correct or not. So then you can go for indexation method, okay? Because initially he purchased in 2007 at 11.75, packing this much. Now this basic cost can be indexed. So by the way of indexation method, I said that this is nothing but the inflationary factor, depending on market, depending on the economy, depending on the inflation rate, depending on the exchange rates, if it is imported, and a lot of things. So then we have worked out that okay, index cost comes to 1527, and this way it came to 1533, while he claimed for 1904. I think this is what the great adjustments we have to do while assessing the loss. So this, while assessing the loss also we have to see, and then adequacy is automatically checked in this, so it can be simply compared with the sum insured. Slide is seen, no? Hello?
Yeah, it is opening. It is
Okay,
open.
good.
Yeah,
Now,
it's open.
this is one of the rubber factory case, and loss assessed, okay, then loss assessed was 84.41 lakhs. It comprised of building repairs, replacement or repairs of cost, plant and machinery, stock, debris removal, firefighting services, of course, that we understand, and then building. Okay, loss claim and loss assessed. See, this is the, depending on various factors. Coming to plant and machinery loss claim and assessed, that details are given in the annexure, but let me discuss straight away the principles. So against the loss claim of 64 lakhs, 63.83 was claimed. The insured have installed a cooling tower, and this is also the adjustments. Loss of stock, yes, I think loss, this is to be valued here, okay? So while assessing the loss also, you can advise the insured that okay, you are not going to get more than this, even though you claim. So better you give me the cost of production in a proper manner, so that I can assess properly. Otherwise, I will make the adjustments. So now adequacy of sum insured building is very simple. The per square feet rate was this rate also is to be analyzed while doing the valuation. Most of the valuers, what do? They take the PWD rate and say that okay, 600, 400, 500 rupees per square feet, and that is what I have planned, and they think that they are the great valuer, but that calls for the dispute. So in that case, better to analyze the rate analysis of similar kind of construction, or if necessary, one has to take the advice of any civil engineer, good civil engineer. And then this is how underinsured plant and machinery. I think this is what the now see present replacement cost of similar plant and machinery installed of the subject insured policy consisting of various equipment estimated to be 94.0. These are the various equipments were listed out and their values were found out. Now we have also analyzed the fixed asset schedule because the insurance is also related to the financial matters. So we have to find out the fixed asset, how he has capitalized, and whether these items are existing in that fixed asset register or not. Otherwise, insurable interest becomes the challenge to the surveyors and valuers. So plant and machinery is 95.12 lakhs rupees by indexation method. Okay. So replacement cost by way of quotation, by way of estimates for 94.25. This is the insured's estimate. Fixed asset register by indexation method, it showed 95.25 and 95.12 lakhs, and this is how the adequacy has been checked. So here it is the necessity that the surveyors take the due diligence and do the valuation properly, so that and then in coming days, I think this is going to be a great challenge for all the surveyors, because new entity valuer is likely to enter in. Now, textile processing unit. It was mostly related to the stock. So, and then assessed loss was 88.25 lakhs. That was the fabrics and stock of color, chemicals, and all these things. Building, plant and machinery, 47 lakhs rupees. And then this was the loss. Now, the stock of fabric is of third parties. Now, when there is a third party stock is there, I think valuation is a great problem, because from third party, the goods related trust clause to be seen, and then valuation will be different kind of job, because stock transferred by the third party, not necessarily at cost. So we have to see that what are their original purchase cost, that he has to transfer at cost only, and then processing cost is incurred by the insured. and then the process cost is added, and then when it goes back to the third party, it goes along with the profit of the insured. So that profit we don't have to assess. So this is how it is. Plant and machinery damages have been reinstated, yes. And then depreciation on stock is not deductible. Depreciation applies not deductible because the RIB policy. And then building, yes, salvage. And then coming to state adequacy of some insured. Okay. Now the insured had stock of goods held in trust worth this much. The stock was very simple. Stock of color, okay. Building, okay. And then building also similarly, it was to be depreciated here because it was not reinstated properly. Okay, so in that case, this is how. And the plant and machinery. Coming to plant and machinery is very important, because now see, based on the indexation method, okay, it was underinsured by 26.31%. However, the insured argued about the decrease in the prices in the current market by producing the quotation. That happens mostly in textile industry, I understand, because market values goes down. So he brought the quotations from the major machineries. Okay. And then by that way also it was 21.76%. So whether to take 26.31% or 21.76%. Okay. In that case, if you take the average, I think that should not be any dispute, because we have given the insured fair chance to prove himself that he is adequately insured. So this is how I think we can say, because why this 6 crore 9339 lakhs was quotations of the machines. But if you go to the fixed asset register, when they are capitalized, they also capitalize some of the items which is called as a balance of plant, because not only simple machines are required, because that also requires other costs like some engineering cost or some kind of labor, special labor. So in that case, I think this is how nobody can challenge us when we do the survey and valuation therein. Cotton industry. Okay. There was a cotton stock is just like other stocks. Cotton stock is also typical stock, and then we have to go into the manufacturing process, that how the manufacturing of cotton takes place and at which stage it has been developed, has been damaged. So accordingly we have to do the valuation. So adequacy of assessed loss were very small. Okay, insured claimed 12.20 but 11.13 was assessed, and then he claimed the rate of cotton gasdi at 65 per kg, but whereas loss assess was 60.44. I think this is where the calculation arises. Okay, and then we have to have the scientific working on that. Okay, now since the insured is having the practice of purchasing this kind of the kapas, or you say cotton, raw cotton, and then he purchased this much, so he paid 25.69 rupees per kg for manufacturing gasdi. So 26.5 per kg is the basic cost he has incurred. And now as per the manufacturing process, kapas process average 33% yield. Now when you process the kapas, then you get 33% as a yield in form of 30% yield in form of cotton, and rest goes as cotton seeds. Now cotton seeds realizing some value. Okay, so the average cost which the party realized was 9.5 per kg for cotton seeds. So this is the credit available to the raw material. To that extent, less raw material value has gone to the manufacture of gasdi. So this is how it has been worked out. Kapas required to manufacture 1 kg of cotton is 3.03 kg. If multiplied by 25.69 rate, it's 77.84 rupees. And then 1.93 kg of cotton seeds are sold, okay, at 9.5. So 18.42 is realized. So this is how the manufactured cost of finished goods is 59.42. This is the raw material cost. Now raw material cost, you have to add the process cost. Now for that earlier immediate financial year, immediate preceding financial year balance sheet was analyzed, and accordingly how much kapas was processed in last year and how much gasdi cotton was produced. This is what here also you can see is a 1/3 ratio. And manufacturing expenses. So what are other expenses they incurred? This is per kg comes to 1.02. Manufacturing expenses and 0.56, that is cost of ghastly and cost of material, stripping and all these things. So that adds to 1.58 rupees per kg. So if you add 1.64 into 59.42, it comes to 60.44 kg of the ghastly. So this is how you can assess the loss, okay, and do the valuation of ghastly. And suppose some big cotton manufacturing is asking your advice on sum insured, I think you can do this kind of scientific analysis and advise them as a valuer. I think this is there are n number of cases, and we may not have much time to discuss on that. But let me go through a big plant, okay, where you may come across sometimes to do the valuation, and why valuation is a different kind of art. That is what I am going to appraise. Don't get confused that nobody can do this. Anybody can do this, and surveyors are the best people to become the valuer. Because they have habit to pass through the pass through the pass through the plants, assessing the um, assessing the conditions of the plant and machinery, and I think they have good feel about the plants, so they can do the evaluations properly. Screen is seen. Hello.
Yes, yes, yes. It is.
So
Yeah,
this
it is
is
visible.
one of the valuation report recently I have prepared from Ceylon Petroleum Corporation Limited. This is a confidential report, but just read it and forget it, because I had no time to change the name. So this was for insurance purpose, and I was appointed as a valuer to advise them on valuation, and the same time second part is on advising them what kind of risk they should get covered to adequately protect the plant, okay. And then you know that Sri Lanka is most of the equipments and machineries, they are not manufacturing, but they are imported one, and they are mostly coming from Korea, Japan, UK and America, and sometimes from India also. So this is the plant, and then let me see the tell the valuation, because large this was the team, because it is not the one person job. You have to have a different expertise, and that you have to mention here. And as a valuation report, we have to see that who is the valuer, and we, whose advice we have taken, who experts were involved, because valuer is not expected to be expert in all the kinds of assets. Similarly, surveyor is also not expected to be expert on, but he should be very thorough on his insurance principles and loss assessment practices. Similarly, valuer is also expected to know the valuation aspects. Not necessarily he may be expert on a particular kind of assets. So the purpose was to fix the sum insured and as a part of the risk management policy. Why insurance and all these things, let us forget, because I have already discussed all these things, and here just as a theory and to appraise any reader that okay, what is the valuation and why we are approaching to the reinstatement value and advising, that is the purpose of this literature, and that also becomes the part of the report, stocks and all these things, and then value as consequential losses, because loss of profit was also required to be advised. And now see, large plants, you cannot go to each and every machine, each and every equipment and say that I have seen these specifications, and it will take years together to understand, because they have taken years together to construct the plant. And if you have to value, okay, at least 1/10 of the time you have to spend for that, no? Because they have constructed these plants over 30 years, okay, addition, deletion and all these things, and you are asked to do the valuation in 3 months. So you have to have the techniques of indexation while scrutinizing the fixed asset register, which in and every item of the asset is to be thoroughly understood. And then fixed asset register also having some relevant items and non-relevant items. So non-relevant items are to be removed, which are not necessary. Just like foreign exchange variation, also they capitalize. Interest during construction also capitalize. But when you are working out the reinstatement value, those items have no place at all. So in that case, they are to be removed from fixed asset register, and then only you can apply the indexation. Plant to be visited, definitely it is must, because some of the assets may be operational assets, some of the assets may be dead assets, okay, or not in use assets, or maybe spare capacity assets, or maybe I think spare plants, okay, standby plants. So I think we need to mention when we advise the insured on sum insured, at the same time their risk management policy. So discuss with technical person and gather a lot of information on that. And then valuation based on distribution land is not the part of valuation. Building reinstatement value, so reconstruction cost new to be worked out, means similar kind and capacity or kind and similar kind of material. If I have to construct the buildings today, what it will cost to me, that becomes the replacement. In that case, one has to review the drawings if available. If not available, I think he has to apply different technique for working out the rates. Plant and machinery, yes. Then location wise and construction use specialized plants, because these are special price plants. They are not readily available in the market. Nobody will give you the quotation also. Okay, in that case, indexation method, the one has to have the production price indices of respective countries, inflation rate, custom duty and taxes, and then foreign exchange rates, and because all these matters while doing the indexation. Okay, indexation is not just like a small simple index given by RBI can be applied, but every industry, every asset has different kind of indexation. So one has to make the indexation for this kind of tailor-made or specialized plants. So this indexation is a very, very great exercise. I think this is not the session for discussing on that, but when we come to the detailed kind of valuation, which I am teaching to the master of valuation courses in plant and machinery and real estate valuations. So there I am teaching on that. So how to do the indexation and what parameters are to be taken. Let me just appraise you what kind of parameters are taken into account. The government publishes, this is the Sri Lankan government, publishes wholesale price indices of various asset and classes. Secondly, the country mostly depends on imports. All these economic parameters we have to understand, and material of specialized services. So the price indices of those items in international market where conditions in addition to foreign exchange, because most of the plants are imported, most of the machines are imported. So the dollar variation, euro variation also affects the value of those assets if are to be replaced today. So Sri Lankan inflation rates analysis of 94 to 2024, what is likely to be this? So that has been studied from various sources. Information has been collected. A lot of literature surveys required. Per capita GDP, gross domestic product, how GDP has, that also shows that how the inflation rates might have gone up. Sri Lankan exchange rate, how exchange rate has been changed from over the period from 1962 to 93. You can see that the Sri Lankan rupee is diminished, just like Indian rupee compared to the dollar. So if at all, if I have purchased the machine in 1979, for example, okay, and the same price has not changed, suppose in international market, but I will end up paying, I think 20 times in 2019. This is how, and suppose all other parameters have not changed, even price in the international market has not changed, but exchange rate will make the difference that I am going to pay 20 times what I spent in 1979. So interest rates, yes, definitely interest rates also affects. These are available in central bank of country. And then trade prices, how trade prices have varied over a period, that can also show you, and that also helps you in deciding the indexation for particular kind of asset. Because if you review the asset registers, it may be running into thousands of line items, like thousands of items. I think each and every item, of course, cannot be seen, but at least you can make groups. If these assets, I think it was forming about 150 groups, and there were 10,000 line items. So wholesale price indices, that also shows that how the prices have moved. These are general wholesale price indices. Similarly, asset wise also they may have, but it is not that much scientific. So we have to work on various other economic parameters. This is how the indexation has been done. Cost of constructions have changed over a period. See that the same kind of assets in 2000, it was, let us say, 150. if it is to be replaced today, I think it is 100, 600. So 150, 600 by 150, almost it has gone by 4 times from 2000 to 2019. So this is what the cost of construction. So this gives you, when you do the valuation, you understand that how the prices would have moved and what my replacement cost should be. New replacement cost new today. Labor index. Now labor is also playing very, very important, not only material. Okay, here you can see the material, but here you can see the labor. Now labor rate has increased to the greater extent compared to the material cost increase. Okay, in our country also you must have experienced that 10 years before or 20 years before, we were spending 20% of material cost as labor. Today we are spending 50%, 40 to 50% cost of material as labor. I think this is what the great inflation has happened in the labor cost compared to the material cost. That also affects when you are indexing or inflating the original cost to the present level. So, and then these are the wage levels. Okay, that also shows. So, and then all this analysis, then ultimately it ends up like this: how the material costs have changed over a period. That steel pipes, cement, steel, raw steel, and then sand and aggregates, bricks, and you can see this is how the trends have happened. So then you know that when I have to construct the building, how much steel it is going to consume, how much cement it is going to consume, steel it is going to consume, pipes it is going to consume, bricks it is going to consume. Or if you go to the pipelines in the or say the plant and machinery, then also these materials goes into. So this is how it shows. And then you have to have the analysis of plant wise or equipment wise, that how much material is it going to consume, and then what would be the labor component. Okay, so labor component is today it is 45% of the total cost. Earlier when it was installed, let us say 20 years before, this might have been 20% or 25%. So this is how indexation one has to take into account, and this is how you can advise the client plant wise. Of course this runs into thousands of pages because as I said, it is 10,000 line items. So this is how we have advised that it is nothing but 5,867 crore Sri Lankan rupees. Okay, so this is how you can advise, and ultimately you have to certify that you have to done the valuation as per international valuation standards. So tomorrow, we surveyors, if we have to act as valuer, and in that case, we have to have the knowledge of international valuation standard, because our country has also adopted international valuation standards. So this is how the idea of appraising this subject is to give a feel to the surveyors and the insurance companies that valuation is not to be ignored if they have to avoid the disputes in future. And another my objective was to explain to the surveyors that yes, they can become great valuers provided they enter into the Valuers Act, and they have to find out the way how they can enter into and enter into the field. So read in Valuers Bill 2020. There is a chance, because IRDA Act is likely to be amended through Valuers Act 2020. Okay, so valuation is art is a very complicated and tricky affair, but not so difficult for our surveyors, because they were mostly engineers and chartered accountants, so they can easily work. And now a lot of courses will be introduced once Valuers Act comes, because there is also provision, new institute will be formed, which will be named as a National Institute of Valuers, and they will be running number of courses of different subjects, maybe including valuation. Because I have seen number of course and seminars of our Indian Institute of Insurance and III or National Academy of Insurance. I think this valuation subject is grossly neglected and not discussed much. I think that National Institute of Insurance, sorry, our National Academy of Insurance should also take up this as a very serious issue. And because tomorrow the valuer is going to be a different entity, and he will also act as intermediary to act as an arbitrator or to act as a act as an expert witness on behalf of the party, and they can also represent, and they will have a lot of arguments, lot of scientific methods to prove that either it is adequately insured or underinsured. So valuation is an art. So best wishes to all, and I suppose you have enjoyed that, and I'm thankful to IISLA for giving me a chance to present before you. Thank you very much. Thank you.
Uh, Thank you, Patel sir. It was a very informative session. So there are a few questions we
Yes.
have in our mind.
Yes.
Apart from this, the technical presentation you have given. Okay. Now you have said that the National Institute of Value is coming, and then all this the act will be also changed, and the surveyor will not able to act as a valuer. Okay.
No, they will not designate even.
Yeah. So my question is that what is that the need arise, okay, to so that the special or the different entity of valuer to be introduced in this insurance regime.
Yes.
What
So
is that?
we need to take up matter with IRDA. Okay. Maybe through ISLA or directly also, because our surveyors are there in IRDA also, I understand. Okay.
Yeah.
So they have to take up matter and say that when this valuers bill comes, okay, as far as insurance valuations are concerned, it should surveyor should also be designated as a valuer as far as insurance matters are concerned. Okay.
Right.
I think
Right.
we should find the place.
Right. So apart from
Otherwise what happens? No, valuer who is directly going there, he will only will be able to do the valuations of insurance as well. Okay, because IRDA Act also has been mentioned therein.
right, right.
Yeah.
So apart from this technical or you can say legal problem, I'm thinking in perspective of the education part. Okay, so what is that we are lagging behind, that we the industry feel that this evaluator as a profession to be introduced as this thing. So what is that need basically, and where we need to be work as a ISLA also, as a surveyor also,
Yes. Yes.
so that in future also there may be the other profession also will enter into this insurance industry.
Yes. Yes.
So that we can equip with ourselves, so that this kind of need will not arise in future.
Yeah. Yeah. So see, we need to do a lot actually. Valuation itself is a different profession. We should appreciate that. Okay.
Right.
It is
Right.
not just like that. No, I have been given surveyors and loss assessor license, so I am writing myself as surveyor, loss assessor, and valuer. I also did the same thing. Okay.
Correct.
Later on, because I joined this profession very late, maybe in 1998, after my 18 years of industrial experience. So at that time, also all surveyors and loss assessors were writing valuers. So I also used to write the valuer. Okay.
Right.
But since I have a different kinds of clientele, being cost accountant also, I was dealing with number of companies, and I was appointed as a cost auditor also. So at that time I came to know that okay, valuation is some kind of something different. Okay. Yeah. And then whoever was it pretending at that time as a valuer, the parties used to take the valuation from anyone who was pretending himself as a valuer, and then they were filing into the balance sheet and all these things. Okay. And they were manuring the balance sheet and profit and loss account the way they wanted. Okay.
Right.
Yeah, then I gone into the details saying that what the valuation is. Okay. And then I learned after that, actually after 98 only. Yeah. And by 2005, I came to the national platform and understood that okay, valuation is altogether different area, and it's a very, very big sea wherein we so-called valuers have not entered into. Okay. Though we have been doing a lot of valuations in our insurance claims day by day, day to day. But knowingly or unknowingly, ignorantly, I think the valuations done in insurance is not in a scientific way. So we have to have the training to our surveyors and equip them, because they are doing a lot of surveys in complex plants also. Okay. Yeah. So they have to understand the valuation aspects in thorough, because I have discussed with number of large very senior surveyors also. And then they said that yes, valuation is a different area.
So that is
And
the
one of the
key.
senior surveyors is also present. I think he may be posing the question as well.
Yeah, so that is the key takeaway for the surveyors. Apart from this knowledge session, that we need to be invest our time, we need to be invest our money also to learn the things, so that we can be a competent enough in the market,
Yes.
so that nobody can replace us. It is
Yes.
not our license that we are getting a
Otherwise,
job.
no,
It is our capability and knowledge we are getting the job, right?
Otherwise, it gives disrespect to our profession.
Correct. So that is the key way. Okay. So coming to the, so many people are asking the questions. We will take a few questions with, because it is not possible to take all the questions. We are around about
Only
22
few questions you can edit and then post.
Yeah. And then what we'll do is the rest of the question, I can mail it to you. And whenever it is possible to you you can give the answer. We will put it on our LMS that is we have created.
No, I will note down all the, you give me in the Word format and then I will note down the questions and then give you Word back file, back to you. Okay, Word file.
So one of the senior surveyor asks is how the foundation can be separated in case of present day structural designs of column and bearing design.
See, foundation cannot be separated out easily, okay? Because they are specially constructed for the plant or for a particular machine, okay? Right. But plinth and foundations, we know that when we see that, okay, plinth, sometimes what happens, no, it's a very, if you ask to any civil engineer, okay, for buildings, and depending on kind of the soil, he will say that, okay, this building is a single story. So almost 30% cost might have gone to the plinth and foundation. If you go to multi-story buildings, it may vary from 20 to 30% or 10 to 20%.
Right.
So that depends. And similarly for the plants, okay, if you go to the plants, some machines need special kind of foundation, okay? It cannot be used for any other things, okay? So that becomes definitely part of the plant and machinery.
Right. So there is a very basic question, like, see, in survey profession, there are many surveyors who has a background of they are a diploma holder with the experience of, let's say, 25 years or 30 years, or some may have 40 years of experience.
Yes.
So can they be considered as equivalent to degree and appear for this valuation?
As per Valuers Act, there is no provision for that. Okay.
Okay.
No provision for entry level as a diploma. Okay. That's why I am saying that we surveyors have been working since long, and even diploma and with good experience, they are much better than degree engineers sometimes. Okay.
Right.
So why they should be deprived from the valuation area, at least for the purpose of insurance. Okay, forget about a lot of other areas.
Right.
But at least for insurance, they should not be deprived. Okay.
Yeah. So one of the participant has a question. He is also a member of your Institute of Valuer.
Yeah.
And previously he is having qualification of diploma, but now he has taken this MTech degree with correspondence. So can he eligible MTech in
MTech? Okay. Yeah.
It's a correspondence degree.
Yeah.
So will he eligible to this thing?
See, he should make an application from, go to the IOV side, okay, and take the application and find out that, okay, he is eligible. Definitely he has a degree, definitely, because whether correspondence or through part-time doesn't matter. So he has the degree, and if the degree awarded by the university, which is approved by UGC, I think that should not be any problem. He should make an application and we'll be able to grant him approved valuer.
Right. So see, there are the question from members that they require some kind of case studies. Okay. Yeah. So we have already created our digital knowledge sharing platform for the members, that is LMS, Learning Management System. Yeah. So if you share your case studies with that, so we can give it to all the members. So, but I will request all the members not to use this as a template, but to understand, to learn from these case studies. We need to be use this case studies, not to use as a template and give this cut copy paste report to the concerned authority.
See, case study just to improve the knowledge, okay, and clear our basic funda. Our
Right.
theoretical knowledge is strengthened by way of case study.
Correct.
So it is just for understanding, but otherwise each and every claim has its own merits.
Correct.
So cannot be blindly applied.
Correct. Correct. So we have one.
I'll give you case study, don't worry.
Thank you, sir. Thank you very much for your cooperation. We have Mr. Bhagwan Kamath from this Goa. He has some question. Mr. Kamath?
Yeah, hello.
Yes.
Hello.
Yes, Mr. Kamath.
Can you hear me, sir?
Yes,
Yes,
definitely.
yes, you're audible.
Yeah,
Please ask
I
me.
just wanted, see, I wanted to know for project policies, if suppose, take example of CAR policy, if there is an escalation of some, suppose 30%, now this escalation is to be applied on pro rata basis, or there is some other method for project policies?
See what happens when project policy is the requirement. One thing that the cost of completed project, no projected cost of completed project in the ER policy, that should be the sum insured. Am I right?
Yeah, that is okay. I am talking about escalation, sir.
Yes, escalation. Suppose today you have finished the project, correct? That is what you mean, no?
No. Suppose today the project has started.
Yes,
There is a 30% escalation. After 4 months, there is a claim. Now this escalation is applied on pro rata basis, or it is applicable right from day one for project policy?
No. What happens, no? It year policy or car policy, they go by the contract. Okay. So you have to refer the contract, and in the contract there are conditions. So you have to read the conditions. Now one contract is say that okay, you have to complete the project by, let us say, 31st March of 2022. Okay. And the firm cost is, let us say, 100 crore rupees. Means in 100 crore rupees you have to complete the project by 31st March 2022. Correct? So means this 100 crore is expected to include profit of the contractor as well, or erector as well, and cost. Okay. So the sum insured should be 200 crore as per that contract. Now some of the contracts are also defined that okay, material escalation price will be given based on the indexation, correct? And labor cost will also index. So today's estimate is escalated to 2022. Am I right? This is what you want to mean, no? So we have to see the contract conditions.
In the contract, it only says escalation provided 30%. That's all. No other wording.
You take 30% then straight away, because contract.
So 30% is straight right from day one, or on pro rata basis?
See, 30%, suppose, but what is the period, project period?
Project period is, let us assume, 2 years, and within 4 months there is a claim.
Yes. So escalation is 30%, means what they have done. Today they have estimated, let us say, 100 rupees. Okay. But when you complete by in 2 years, you will be paid 130 rupees. So your sum insured should be 130 rupees.
Okay.
Clear?
Yes, yes. I think it's clear now. We have Mr. Rahul Jadhav is our secretary. IIISLA. Rahul sir, you can ask the question.
Yeah. Am I audible?
Yes.
Hello.
Yes, you're audible.
Patel sir.
Yes.
If a surveyor has been assigned a property claim, will it be giving a right
I did not get it.
of interest if he proves confirms
Please speak again.
Are you able to hear me?
Yeah, now I am able to hear.
Hello. A property claim under SPSP policy is assigned to a surveyor, and while checking the adequacy of sum insured of the property, can that same surveyor, who is an approved valuer also, can certify the adequacy of sum insured?
No. See, that is part of your assessment. You cannot escape from that. You have to do that. Okay, you have to do the valuation for adequacy.
Okay, and sometimes we are asking for a valuation report from approved valuer other than the surveyor who is.
You can. Yes, yeah. And that would be better. I think you are giving fair chance to the insured to prove that, okay, he is adequately insured. But
Yeah.
ultimately, as a surveyor, it is your duty to verify whether valuation has been done properly or not as per your policy requirements.
Yeah. No,
Okay. So you cannot escape from your responsibility as a surveyor, even though you refer somebody else's valuation. Yes. Hello.
Hello, Rahulji, there is a problem from your side.
Right,
We are
but
not able to
will that
hear
give
you.
a right? Will that give a conflict? Okay, okay,
Hello. The voice is breaking.
okay.
Rahul sir,
Acha, acha.
your voice is breaking. I think
Okay.
you can send your
Right.
question. We will take this matter.
Right. Okay.
Uh,
I will write. I will write in.
Yeah, thank you. Mr. Manchanda ji, you have 30 seconds only. Can ask you quick question.
First of all, I thank Mr. Patel for this nice session on behalf of all the surveyors. But one thing I want to ask him, he has said that in EAR policy that escalation clause that has to be applied. Mr. Kamath said that it is for when a loss has occurred after 4 months. Here I would like to add it here. Whatever the escalation, actual escalation because of the price rise is there. It may be 10%, it may be 8%, 6%, or 15%. That actual escalation has to be taken into account while assessing a loss.
That's true. While assessing the loss, you have to check that.
Yes, of course. That
Definitely.
this is what.
But
Yeah.
his question was for valuation. So valuation is okay. 130 we have to take as a sum insured. But
no, sir. Sir,
yes.
one thing is, whenever we evaluate for valuation of the value at risk, same way we have to allow the same rate while we are assessing the loss also. That is why we did that.
Yes. So at that time also, we will adequacy sum insured. We will check up that what is the actual inflation taken place. Okay.
Right,
and that actual inflation only we will apply and compare with the sum insured.
Exactly. Sum insured, compare with sum insured, and we will allow that escalation while assessing the loss.
Yes, both principles should be same. Yeah.
Yeah, of course. We can't have two parameters, sir.
Yes.
Yeah. Thank you very much, sir. Thank you.
Yes.
Thank you.
Thank you, Manjanda sir. I will ask Mr. Basin to have this your question quick.
Yes, thank you, Mr. Satyan. Thank you for giving me the opportunity. Thank you, Mr. Patel. You have done a lot of job. I must congratulate you.
Thank you, sir. Thank you.
My query is, what about the monolithic blocks or the structures, say RCC? Suppose a large industrial complex that is a RCC structure, and I would call it as a monolithic body.
Yeah.
If it is burned down due to a devastating fire, what would be your call on plinth and foundation, irrespective of it being damaged due to fire or not?
Yes.
Thank you.
See, this is, I think, special plant. Am I right?
Yes.
Because this building is not the general building which we are using for residential or commercial.
No.
So this is plant and machinery. So plant and machinery. As initially I said, these are special structures created for the specialized plant and machinery. Am I right? So to that extent, the complete foundation, plinth, and this superstructure, all to be treated as a part of plant and machinery. Correct?
Correct.
Yes.
And in case it's a smaller industrial unit, but used for, say auto parts manufacturing.
Yeah.
And the stocks stacking is say up to 8 feet if the roof level is 12 feet. What is your call on heat transfer due to the metal parts after the fire going down to the plinth and foundation?
Oh, that is, see, for salvage you are talking about, no?
Sorry?
For salvage you are talking about?
Yeah, I'm talking about the salvage because it is a metal component.
See, what is the definition of salvage?
No.
What you can recover?
Sorry, I will have to repeat my question, I think.
Yeah.
I said, suppose it's a small industrial unit manufacturing, say, auto parts.
Yes.
Now the metal part stacking is up to 8 feet if the roof level is considered to be 12 feet. Now in case of fire, the superstructure is damaged. And what is your call on the heat transferred by the metal parts down up to the plinth level? will it go down or up, or what you will consider in that case about the plinth and level being an RCC structure?
So plinth is very well defined everywhere. Plinth is well defined, sir.
Plinth is RCC. It is not the break and
Plinth is
normal.
RCC, but this is small manufacturing, small plant, okay, where auto parts, the machines are not special machines which are for which you have constructed any special structure, okay. It's a kind of a general building of any industry.
So that means you will not allow that plinth and level in that case.
If plinth foundation is not insured, then not allowed.
No, it is insured because it's RCC building. So plinth is automatically covered.
So automatically covered. So we have to allow that.
We have to allow it. Thank you. My query is over. Have a good day.
Thank you.
Thank you. Mr. Abhay Kadam.
Hello. Good evening, sir.
Good evening.
Yes, good evening.
Sir, I would like to ask, I have given one report of risk inspection for 155 crore bridge. In that case, insured would like to know whether the insurance company is prepared for reinsurance, or there is no any necessity for the need for whether they are prepared for or not prepared.
See, you have been asked to do the risk inspection.
Yes, sir. I have done the risk inspection.
Good, good. And since you are competent, you have given?
Sir, I have given my report also.
Okay, you have given the report, no?
Yes, sir.
Once you have given your report to client, he can use anywhere?
Yes, sir. He has given for 2-3 companies, but he asked to me, what is your knowledge for regarding that? Some companies are giving only premium to him, and some companies are telling him that there is necessary.
It is just like, no, when I have given my survey report,
yeah,
whether insurance company refers to some expert or some legal opinion or some chartered accountants, can you escape from your responsibility?
No, sir, it's correct thing, but for our knowledge, whether it is necessary or not, for if customer is asking me what is our knowledge, at the time I have told me that it's depend on insurance company, but for our side,
that's why I am asked you, no, that you are competent yourself, correct?
Yes, sir. Yes, sir.
Then you can take the assignment. So
yes,
we
sir,
should not take up the assignments in which we don't have any kind of knowledge, expertise, or no capacity to complete it.
Yes, sir. Yes, sir. Okay, sir. Thank you, sir.
Very simple.
Yes, sir. Thank you, sir.
We have Mr. Bhatia, sir. Bhatia, sir, can you have a quick question?
Can you unmute me? Are you listening me?
Yes.
Yeah. We are.
Sir, there are invariably disputes, particularly on plant and machinery.
Yeah.
On the life of it, on the rate of depreciation, because there is no data available on the life of machines, which is the main criteria in case of insurance.
Yes.
Depreciation in other taxation purposes are defined, but not in actual life basis.
Yes.
How to really overcome this problem?
Oh, very simple. Don't write age. Don't write that age of the plant is 5 years or 10 years. Okay. What you write, yeah. I will giving you the clue, no? How you can cope up with this problem, because this is going to be dispute everywhere. Somebody will say 8 years, somebody will say 9 years, somebody will say 7 years. Ultimately, being surveyor, you are responsible and you are an authority. That is what you should not forget. Okay. So what I suggest, that don't write the age. What you write, that based on my inspection and looking at the conditions and maintenance level and equipment of the plant, in my opinion and my assessment, the effective age of this plant is 8 years or 8.75 years. If I have to compute, I will compute 8.75 years, neither 8 years or not 9 years. Okay. Then 8.75 years, I will prove it. So I will write effective age. I am giving you the term effective age, because nobody will be able to define effective age except you, because you have visited the plant at relevant time. Clear?
Yeah.
And what is the difference between age and effective age? Let me explain you very simple way. Okay. Now, a person whose age is 60 years. Listen carefully. Whose age is 60 years. Okay. Chronological age is 60 years. So you can say that his age is 60 years. It's very simple, no?
Yeah.
But he may be looking like 50 years old.
Yeah.
So in that case, his effective age is 50 years.
Okay.
And suppose he is suffering from some illness, okay, early stage diseases, okay. In that case, 60-year person may be looking like 65 years or 70 years. So in that case, his effective age is 70 years. So don't write age, write effective age, okay?
Okay.
Good.
Okay. Now, if I'm allowed, I have a small question again. Another. In case of traders.
In case of
traders, the stock value we are taking on the book value. See, the material is coming over a period of time. Earlier purchases may be of a lower value, and now the purchases may be of a higher value for the same product.
Yes.
In that case, his loss is of the latest price. One. Number two, it is not merely the purchase value in case of trader. It is also other costs added to it, like his storage cost, his inventory cost. He may be paying interest on the inventory, which is maintaining with loans. What valuation should be really taken for insurance in such a
very simple. Whenever you are dealing with the stock of traders, and I have explained in my presentation also, traders, the value of the stock you have to take cost or market value today, whichever is lower.
Why lower, sir? When it is indemnity, then why lower?
Yeah.
If it is indemnity, then it should be in true split.
No. Cost or market value, whichever is lower. Okay. Even though indemnity, I have purchased, say, one item 1 year back in 100 rupees, correct? That has been stored for a year. Today, the price has gone to 110 rupees, and today I am replacing by 110 rupees, correct? So it is not necessary that you take all the stocks as 110 rupees, because when you are storing for 1 year, the value will not increase. Okay. So you have to take cost or market value, whichever is lower as far as stock of trade concerned. Okay.
So even while preparing the trading account, should we not take the interest and
cost?
But yes, sir, I will request you, we can take up this matter with Patel, sir, because there are 3 more people, and then we have to stop at 8 o'clock.
Okay.
We are running short. Thank you very much for your question, valuable question. I will ask Mr. Balaji or Mr. Janak Mehta to have quick question only, because after that, Sainani sir and Rajnish Desai sir, I will request to give vote of thanks to Mr. Patel sir.
Hello.
Yeah, Balaji. Yes, Mr. Balaji.
Yeah, good evening, sir.
Yeah.
I am Balaji. I am working as a surveyor and loss assessor from Chennai. I am having the qualifications of Diploma in Mechanical Engineering and degree in Industrial Engineering and MSc in Plant and Machinery Valuation. But as per the valuers bill, I have gone through that and found that industrial engineering is not mentioned in that. Now I am doing REV valuations for number of organizations as a surveyor and a chartered engineer also. And I am doing REV valuations for them. Since industrial engineering is not mentioned in the valuers bill, what about my fate in REV valuation in future?
Yeah, I think we lose our contact with Mr. Patel sir.
Okay.
Yeah. Mr. Balaji will take up this question with Mr. Patel sir, and definitely will give the answer. Okay.
Yes, sir. Yes, sir.
I think Patel sir contact, we have lost the contact.
Because I am having 30 years industrial experience and 5 years surveyor experience.
No problem. We will take up this matter with Mr. Patel sir.
Because my qualification industrial engineering is not mentioned. That is my query, sir.
Yes. Okay.
Right, sir. Thank you.
Mr. Mehta, Mr. Ramesh Kumar, sorry for that. We will not able to take your question, though I allowed you, but we have lost the connection with Mr. Patel. Mr. Sainani sir, Mr. Desai sir, you can give this vote of thanks as one second. There is a call from Patel sir only. Hello. Hello. Actually, thank you, Rajnish Bhai. Because of you, that we got such a wonderful faculty. Sainani sir, you want to quick?
Bilkul. Now I am online.
Yeah, you are on the line, sir.
Okay. First of all, simply I want to say thank you, sir. Thank you, sir. Okay. Not as a friend of R.K. Patel, not as a colleague valuer, not as a colleague surveyor, not as a co-faculty, and not as a room partner on several occasions. We are so lucky to have him with us and giving a wonderful deliberation for surveyors. I must say it was all applause from my side, because I was posting lots of applauses for Mr. Patel. I'm so happy. We are lucky. Maybe we are 300, 400, 500 or 1000. We are lucky to have him as member of our institute. He's one of the topmost valuer in country and a very good surveyor too. And we will look forward, RK Bhai, to have some more wonderful sessions with you. Thank you very much once again.
Yeah, thank you, sir. Thank you. Rajnish Bhai, thank you very much. Rajnish Bhai?
Thank you to Mr. for your valuable time, knowledge to our people. So, hello.
Hello.
Yes. We are listening.
Whenever we need, the Patel sir is given every support and every feedback to us. Anytime that assurance are given on behalf of the Patel sir. So it's a very nice, and today we proud for the Gujarat people also. So that we got a wonderful faculty to give a good knowledge sharing about the plant and machine and valuation to the people of our faculty.
I will request Mr. Naresh Kumar. He is also faculty at IOV and fortunately with us today. So can you just sum up this today's sessions, Naresh ji?
Thanks a lot, Sachin ji. बहुत बढ़िया session रहा. It's a very good session, and R.K. Patel ji has already given many sessions on valuation and valuation standard, and I have also learned some of the key topics on this. It's a very wonderful session.
So I will just check whether Patel. So we have already lost the connection with Patel sir. Whether he is able to join or yeah, Patel sir is there.
Sorry for that.
Yeah, thank you, Patel sir. We had actually Mr. Sainani sir, your colleague, Mr. Naresh Kumar ji is also faculty at IOV. They are saying thank you for such a wonderful session with you, and they are looking for many more sessions from your side if time permits you, because you are busy in this bill, and we know that we are very busy in that meetings. So once again, it's a thank you from all the IISLA training team, all the members who have attended this thing. It's a wonderful session, and it's beyond imagination that it's a very informative session we had today.
Thank you. Thank you. It was my pleasure.
Thank you very much, sir. Thank you very much, sir. Rajnish.
Thank you.
So this is today proud for Gujarat. So you give a valuable time within 3-4 days. So in busy schedule, so the people got a good knowledge of our industry.
Yes. So Patel sir, thank you. We will be sending you the questions. And you can also share your material on our LMS so that member will get benefited.
I'll do that.
And definitely we can start session for our surveyors so they can become a valuer also. So let's work out on some plan on that, and our surveyor members can be also a valuer.
And Mr. Sainani is also our member, and he is also in one of the committees.
Yeah. So actually, Sainani sir is the head of our this webinar session.
Yeah.
Okay. So he's very
all praises
for opportunity.
All praises for RK Bhai.
Oh, thank you.
Yeah, it was wonderful session. I mean, I was eagerly waiting for this session.
Thank you, Sainani.
Thank you very much.
So thank you very much, everybody. Thanks, members. Thanks, Patel sir, and then all the panelists, Sainani sir, Naresh Kumar ji, Rajnish bhai. We will tomorrow we are coming with different subjects, and day after tomorrow also we are having subject. So what we will post it on your mail as well as the SMS for the tomorrow's session. Okay. Thank you, sir.
Thank you. Good night.
Good night. Good night,
Good
everybody.
night, everybody. Yes.
Good
Good
night.
night, everybody.
Thanks a lot.